And hello traders, and welcome to another video. So in this video we are going to talk about price action. Okay, so I'm going to explain to you guys what is the price action, why it is really important for you to learn the price action, and why, most importantly, price action is the best way that you can go. Okay, so when I talk about price action, I do not mean retail price action. Okay, so not I don't know, double tops, double bottoms, patterns like head and shoulders, trend lines, different, some kind of different indicators, etc., etc. So no, I'm talking about pure price action. So naked chart. As you guys can see in front of me, I have naked chart. No indicators on the charts, nothing on the charts, nothing is messy, everything is clear to you. So this is the best way that you can learn. Okay, so basically guys, the chart existed a long time ago, and the chart is still going to be here in a decade. So when you learn how to read the price action in details correctly, no one is going to take that away from you. Okay, so as you guys know, markets are consistently changing. Okay, and the period that we are currently in the market is going to be different than in 5 years, 10 years from now. Why? Because market is consistently changing, and when you learn how to read price action, the language of the market, you are always going to be able to adjust your trading accordingly. Okay, recognize the current phase in the market that you are currently at and adjust your trading accordingly. Okay, and at first thing, it's not gonna be that easy. Okay, so think about it this way. Basically, it is the same thing as you're learning new foreign language. For example, let's say you want to learn French. Okay, so when you start learning it, you're gonna go to a few classes, you're gonna attend a few seminars, etc., etc. You're gonna learn the basic stuff, and let's say after 3 to 6 months, time, you're gonna know some basic stuff. But let me ask you one thing. After 6 months learning French every day, doing your homework, etc., etc., are you going to be able to have a full conversation with a Frenchman? Okay, so logically, no, you cannot do that. It's not possible. Okay, yes, you have put in the work. You were doing every day something. Improving your knowledge about the French language, etc., etc. After 6 months, you can speak a few words, a few sentences, etc., etc. But you cannot have a full conversation with the French person. Okay, so in time, as the time passes, and as you're doing more work every day, you are going to be able to understand more and more, and of course, talk more and more. So after a year or two or something like that, you're going to be able to have a full conversation with a French person. It's the same thing for me. Example, I recently came in Switzerland. Okay, I'm like 4 years or something in Switzerland right now. So the first year was really hard. And I didn't attend any courses, I didn't attend any schools. I learned with basically talking to people. Okay, this is how I learned German. And right now I can have a full conversation with a German person with no problem. I understand him, he understands me, etc., etc. So time, guys, is really important thing. So you just cannot start to study today and expect to have results tomorrow. You need to put in a lot of work in understanding the price action, because it's basically like learning another language. And after some time, you're gonna get better at it, etc., etc. And again, why I told you this is the best way that you can actually go with it, okay, is because if you learn certain concepts, okay, let's for example say, I don't know, smart money or retail trading strategies like, you know, Trendlines, etc., because the market is consistently changing over, you know, over time, strategies that you are, for example, trading right now are not going to work in the future, okay? And if you do not know how to recognize that and adjust it accordingly, you're going to be left behind, okay? So let's say, for example, you have a strategy that is working right now and it's bringing you results, bringing you profits, and you're actually good with it. It doesn't mean that the same strategy that you're trading right now is going to still work in 2 years' time. Why? Because again, guys, markets are consistently changing. Just look at the past 2 years, what happened. 2020, Corona hit. Boom, markets collapsed. Completely terrible. Everything was fucking corrective, volatile. It was a mess, okay? It was just a mess. Then 2021 was pretty much normal, and then again 2022, boom, we have wars going on, economy is collapsing, you know, markets are consistently changing. And if you're trading one strategy, just certain concept like, you know, double top or I don't know, head and shoulders, etc., yes, that it is still going to exist, but you cannot just take a double top and trade it. You need to combine it with, you know, something different. You need to add certain confluences, etc., and because the markets are consistently changing, your strategies that are currently trading right now, it doesn't mean that it's going to function in 2 years. But the beauty of price action is that you don't care about a strategy because you're going to learn the language of the market. And you can always adapt to it. You can build on it, basically. Okay? You can build your own strategy, your own execution when you learn the language of the market. Okay? So, in this course, in Hybrid FX, you're going to learn a lot about it. Okay? We're going to talk a lot about a lot of things, you know, about price action and everything, because basically price action is everything. Pure price action. Okay, guys? So we are going to talk about pair characteristics in a separate video, you know, but I just want to mention it. Okay? So I told you price action is the language of the market. This is basically how markets speak to us. Okay? But every pair has its own language. So think about it this way. If Euro USD, you know, has its own language, it will be maybe English. But if you trade GBP USD, it's going to be German. If you trade AUD USD, it's going to be French. Euro AUD, it's going to be Italian or something like this, Spanish, you know. So basically, every pair has its own price action. And that means that if you trade one strategy, and if you trade one strategy on all different pairs and you didn't backtest it, you're going to be in big disadvantage. Okay? So, for example, one strategy is going to work perfectly on Euro USD, but it's going to suck trading it on GBP USD. Why? Because every pair has its own language. Okay? This is why we focus also on pair characteristics. Okay, we are backtesting every single pair that we're trading. We're doing pair characteristics, looking at the nature of the pair, what it likes to do, how it likes to move, etc., and we know what certain things work better on EURUSD, what are things that work better on GBPUSD. So we're not gonna trade them the same. Okay, and this is going to be important tomorrow when you backtest the strategy, when you start backtesting the strategy and you start creating your trade plan, doing your ASR and all of that process. So you cannot use one single trade plan and trade EURUSD and GBPUSD the same. They are totally two different pairs. There's a lot of traders that do not know this, and they just think, okay, I'm gonna backtest this strategy. I don't know, I saw it on TikTok or Instagram or whatever, YouTube, and it's bringing me profits, it's looking good, and I test it on USD, I'm gonna trade it on all the different pairs. No, you're gonna be in big disadvantage. The trading doesn't function like that, okay? So this is why it's important to backtest every pair. Each pair that we are trading here in the community, do pair characteristics separately, do backtests separately on the pairs, and yeah, after you have done all the work, you're gonna see what I'm talking about, guys. So yeah, I think this is the basic introduction that we just finished about price action. Why is it important for you to learn price action? Why it is basically the best way that you can go. You just need to learn it. When you learn it, you're gonna always be in advantage, because market is going to change. Okay, that's for certain, that's for sure, it's gonna happen. And if your strategy starts to sorry guys, I need to tell you one more thing. So basically, the why traders fail and why they're left behind is also as well this thing. So they're gonna have a trading strategies bring them results, and sometimes it's gonna pass. And let's say, for example, 1 year or 2 years has passed and they're trading it, and all of a sudden they see that the strategy is not working correctly. Okay, and the trader is gonna think that it's their psychology, it's their emotion, it's their, I don't know, they're gonna find everything, every single thing, they're gonna be like, it's me, it's not the strategy, it's me, it's not the strategy. Okay, and it's really hard to explain this, because at the same time it is not good for a trader to jump to strategy. Okay, you should have one strategy and stick to it. If you change it, you're like a few months you're trading this strategy, and then boom, you see something that looks good, maybe better than your initial strategy, and you change it, you're never gonna find consistency. Okay, if you do not stick to one thing, you're never gonna be consistent with it. If you consistently change the strategy, you're never gonna have results. And this is why it's hard for traders that are earning money, they are in profit, because they do not want to change their current system. Okay, and they're gonna stick to it, and they're never gonna know what is wrong, and they're gonna find problems in them, maybe emotions, maybe psychology, etc. And they're never gonna look at the strategy. Maybe they never ask themselves, maybe this is a strategy. Okay, because they know that they had results with that strategy. And this is why the Forex and trading in general is a big mind game, a big psychology game, and you really need to think about a lot of things. So this can happen or this can happen. And this is why I'm telling you, when you learn price action, you're never gonna have that problem. Okay, because you're gonna see, of course, I have a trade plan, my own trade plan that I'm trading on the markets, but I'm consistently improving that trade plan. I do not change it. I do not change it completely, but I always look at certain things, what can be improved. Those 1% improvements, those 1% tweaks are really, really important, guys. When you're doing your weekly backtesting exercise, I'm going to introduce you later on in this course about it. You're going to have basically an exercise. We're going to backtest the week. You're going to do trade recap, and also you're going to journal your trades with that exercise. It's really, really fun and good exercise for your improvement. And when you're doing your weekly backtest, you're going to be really seeing and adjusting your trading based on a price action, the current market phases you're currently at. So you're never going to be left behind, guys. Okay, you're always going to improve. And again, this is why when we backtest the strategy for the first time. We take every single entry so we can learn the strategy, feel comfortable with the strategy. And then second time, first time when you finish backtesting, we are basically putting every trade in the journal, doing our ASR, making our trade plan, our checklist, and then we're backtesting the same pair, same years for the second time. you know. So but right now for the second time you're basically, you know, only trading the only taking the trades that we have in our trade plan that we made from our first backtesting, and that's done. We consider it done. You know, when we backtest the pair for the second time, when we finish it, we consider that done. Okay, our job is done. We have done everything on the pair. We know the pair. We master the pair. You know, etc., etc. But there is also third backtesting. You know, this is why, you know, I'm gonna talk about backtesting in a separate video again. But you know, again, this is why it's important to non-stop improve, non-stop find room for improvement. So I'm always gonna backtest the strategy again, so I can find those 1% tweaks that I can change and improve my trading. This is basically the same when you're trading, you know. So learning the price action is really the best way to go. Maybe at the beginning, if you're not an advanced trader and you join the community, you're gonna maybe struggle with price action, but believe me, put in the work, put in that effort every single day, and you are going to see results. And you're gonna basically know the language, and you're never gonna be left behind. You're always gonna be an advantage over the other traders, because again, guys, chart is always here. It's always gonna be there, okay? And if you learn to read it, you're never gonna be left behind, okay? So I think this is all for the small introduction, guys. And second part of this video, we're gonna start breaking down charts, speak about a price action a little bit. So yeah, I have EURUSD here. So yeah, I'm just gonna start, for example, from this bit of price action. I'm just gonna break it down. So basically, there are three types of market phases in a market. Okay, so there's a trending phase when my price action is trending. You know, price action is breaking these highs impulsively and continuing to the upside. You know, this is a trending market. Price is in uptrend. Then there is a ascending price action also, you know. So when price action is pushing higher, but it's not breaking the previous structure impulsively, so you're gonna see something like this, breaking the highs and retracing, price breaking the highs and retracing, and we do not have momentum to continue to the upside. Okay, guys, so price action is in uptrend, but we're breaking these highs with no momentum, and this is showing us weakness. And usually after, when we see this ascending price action that indicates weakness to the upside, you can see the price action is going to reverse. It's basically a reversal pattern. And then we have a sideways market. So when the market is basically trading sideways. So guys, let me draw the standing price action again. Sorry guys, I deleted it. So basically guys, when you're trading, you want to recognize those phases. If the current market phase is sideways and corrective, you do not want to trade that much, okay? So this is where you're gonna adjust your trading accordingly and you're gonna shift, okay? So this is the phase that you're gonna be thinking more about protecting your capital and not trying to risk it, okay? So this is really important. When price action is in a sideways trend and the price action is overall corrective, your trades are not going to be high probability. Let's say, for example, you take the trade here. You know, this is a demand area, and you take your trades here. And when we're trading, you're gonna see every little thing about hybrid strategy, how we manage our trades, why we do it, when we're scaling a position, etc., etc. So we want to take advantage of the trade, and we want to take advantage of the trend when we're trading. So basically, there is one thing why our retail traders are not profitable. You already know 95% of people are losing money in this business. So what are they doing? When they win, okay, they are fearful. So they're scared of money. So when believe it or not, but it is like that. If you're trading on 200K, oops, I draw it like, if you have 200K accounts, okay, so you're trading with FTMO, you passed the valuation process and they gave you 200K. And let's say you're risking 1% per trade, that's $2,000 per trade. So your 1% is $2,000, okay guys? when the trade starts to go for 5%, only 5%, that 5% is right now $10,000. $10,000. Do you think if markets is going in your direction and here you're winning $10,000, okay, and market starts to pull back and you basically right now lost 4,000 and here you're at 6,000, what do you think? What is the emotion that you are going to feel? You're gonna get scared, okay? You're gonna get scared, you're gonna be fearful, you're gonna feel fear. Why? Because you were earning money, you were looking at your MetaTrader and it was $10,000, and then all of a sudden market starts to pull back and you lose money. And you're gonna start thinking that you're basically losing money, but you're winning. But you know, our mind play tricks on us. So you're gonna be fearful when you're winning and you want to get out of the trade, you know, now, immediately. And this is the problem, because with every impulse there is a pullback and there is a continuation. So if you scare close here, your trade on 6K, and you're gonna miss a move that's gonna bring you another 15, 10, 20K, you know? So this is why we have our own trade management system. We're gonna talk about it later in the video, but I want to explain to you why it is not good to trade in a sideways trend. So you're gonna have your entry here in demand, and price is gonna start pushing above, okay? And then you are not gonna be able to take advantage of the trend, because remember, if you want to trade on a forex market successfully, you cannot be fearful when you're earning money, okay? So retail trader is fearful when he's winning and hopeful when he's losing. You do not want to think like that. So you want to take advantage of the market and you want to enter on this demand. You're expecting the price to continue so you can make money. And when you win big. But what happens when there is a sideways trend? You cannot win big. Why? Because price action is going to react from this and it's going to do this, and then price action again is react to this and do this. So you do not have a room to make money, to take advantage of that trend, to take advantage of that trade, to win big. Because when you're right, you want to win big. When you want to bank a lot of money in a single trade, okay? And you cannot do that in a sideways trend, basically, when there is a sideways market. And also it's very manipulative, because there's a liquidity here, there's a liquidity here, and then price is going to sweep that liquidity, and then it's going to sweep that liquidity. You never know what is going to happen. There is the indecision in the market. When there is an indecision in the market, you do not have momentum on your side, and you always want to trade with momentum, because this is your basically confluence. You know, you see momentum pushing in one direction. You're confident that if you take entry in that direction, you have, you know, higher success rate of your trade going in profit. And you cannot do that with sideways trend, corrective phase, because it's unpredictable, it's risky, it's basically market is showing you indecision. You do not want to do that. You want to be patient when markets are corrective, okay guys, and you want to protect your capital. Okay, so there's a ascending phase as well. So this is, you know, 50-50. There are some pairs that love ascending price action. For example, EURUSD. EURUSD has characteristics when there's a standing price action. You know, it likes to shoot up to the upside, and then your trades, if you trade on this demand, it's gonna be high probability. We're gonna talk about it in future videos, okay? So basically, there are certain pairs and certain entries that you are going to trade in ascending price action, okay? For the uptrend, if you want to take your trades for uptrend, or you know, you're gonna wait for a reversal and, you know, trade that change of character and reversal entry to the downside. But again, we're gonna speak about everything in more detail as we go with the videos. So where you want to be a little bit more aggressive even, and when you want to make your money, is when the markets are trending. So when the markets are pushing in one direction, guys, it's the easiest thing ever. You know, there's price action is moving up, you have a pullback. Basically, how market moves like this: impulse, correction, impulse. This is how market moves. Every time when you see an impulse, when you see momentum, it always needs to be a correction after it. And then again, another impulse. When that happens, and when you see this high gets broken impulsively, okay, this is break of structure. If this high gets breaking impulsively, what comes after it? It comes again another correction and again another impulse. This is your confirmation that price action wants to move to the upside. There is a trend. So this is the easiest ways to make money when the trend is present. Okay, price is breaking the highs impulsively, okay, indicating to you that there is a momentum in a market. And of course, your trades are going to be more high probability if you trade based on this demand zone right here. There's just going to be more high probability. You're going to have higher success rate in your trading. Okay, guys. So basically, the point is that you want to learn price action, learn to read price action, and see in what type of phase you're currently at the market. It's going to give you a big advantage because you are going to be able to know when to trade and when not to trade. There's a problem that retail traders are having because they're looking at this price action. For them, everything is the same. Okay, they do not read it as we are reading it, and they're gonna trade with the same trade plan in the corrective phase and the same trade plan they're gonna have in trending phase. And what's gonna happen? They're gonna lose a lot of money when they're in corrective phase, and they're gonna win a lot of money when they're in trending phase. But because let's say for example they lost minus 10% when there is a corrective phase, and they won when there is a trending phase plus 10%, they're gonna be on break even. And what are you going to do? When there is a corrective phase, you're not going to lose so much money. Why? Because you know different. You know better. Okay? You know that you do not need to trade. This is the time when you need to be patient and wait for the market shift. Okay? And you're not going to lose 10%. You're going to lose maybe 2-3%. And you're going to be, let's say, in 3% minus. And then the trending phase is going to come and you're going to earn 10%. So your overall profits are going to be 7% plus. And the guy who just trades without basic knowledge about the price action, he just trades the same trade plan in every market, he's going to be on break even, he's going to never have results, and you're going to be, clever, smart, and you're going to have results because you know better. Okay, so when there's a corrective phase in the market, when there's a volatile corrective phase, you are going to be patient and disciplined, not trade as much, and think about protecting your capital. When there is a trending phase, when markets are clear, when the momentum is present, when there's a clear direction in the market, when there's more confidence in order for you to have better trades, then you're going to win money. Then you're going to make percentages. Okay, guys? So I hope I explained that well. And right now we're going to break this price action. So let's say, what do you guys think based on this price action? What is this price action? This bit of price action. So starting from this to this here. What is the phase that markets are currently present in? Sideways, or market is sideways. It's moving sideways. And there are people who are gonna find demand zones here, find demand zones here, find demand zones here to trade it. But again, they're not gonna win a lot of percentages because market is showing us indecision. Okay, there is a liquidity here, guys, above, there's liquidity below, and you never know what market price action is going to do next. There is this ascending, descending price action. When you see that market is making this ascending and descending price action, it usually indicates bigger correction. We're going to be in bigger correction, and the best thing right now and this bit of price action is to be patient and disciplined and not trade as much. Okay, because price action, you never know what price action is going to do. So as you guys can see, we're reacting from this zone, pushing higher, then we're reacting from this zone, we're pushing lower, then we're reacting from this zone, pushing higher, then we're reacting from this zone, pushing lower, we're reacting from this zone, pushing higher. Do you understand me? There is no clear indication of direction in the market. It's easier for you to win and have results when there is a clear direction. The market is in a downtrend pushing lower or in an uptrend pushing higher. So what we want to do in this situation, when we see this price action, we want to see that we exit this correction. So we mark this major low here, this major high here. If price action takes out this high impulsively, then we're going to look for trades. If price action breaks this low impulsively and we start to trend, we're going to start looking for sell setups. But our trades are going to be safer if we wait for that breakout of this sideways trend. And there are traders who are trading this. There are traders who are buying here and then they make money. So there's a trader who bought here. So as you can see, this is also previous reaction that made a new higher high. Then we reacted from this, and then we again broke this structure here. So they took the trades here, and then boom, they started to a little bit to win money, and then boom, reaction, they lose it, and then boom, these guys are selling, and also they're winning a little bit, and then pull back. They're scaling in the position again. And then again they're winning, and then this guy is right now scaling in buy positions. So what price action is going to do, it's going to take their losses and take their losses and then just be corrective. So this is why you should stay away from it. Also, guys, another thing that I want you to look at when you look at price action is wicks. Are there wicks? Wicks are really they give us a lot of information. We're gonna sorry guys sorry. So we're gonna talk about wicks more in the next couple of videos. But again, what I want you to know, important things about wicks is when you see a trend, you know, price action going lower, and then all of a sudden, let me draw it like this, you know, maybe with candles. You know, you have candles. I'm gonna explain everything in future videos, but again, let me have a quick lesson for you guys. So you're gonna have momentum to the downside, and you're gonna have a big wick. So usually what happens after we see a big wick is that we expect two things, and I want you to write down this and remember this if you're new to the community. Okay, so two things happen when there is a big wick in the market. Price is either going to range, okay, correction, you're gonna see correction. Let's say we have our supply that we want to trade here, we want to take shorts from. If we see the big wick in the market and we see correction after the wick, that means that this wick is respected and it is high probability to take your trades from here, from this supply. But if you see a big wick and right after this wick you see big volatility, momentum coming down and momentum coming up, same momentum, that is bad. It is bad to take your trades. Okay, so two things happen after the wick. Either you have a correction or you have volatility. What is volatility? Volatility is this: when markets come back with the same momentum up and with the same momentum down. This is our indication that markets are going to be corrective. So when you see volatility on the chart, the same momentum to the downside and the same momentum to the upside, you can expect correction. As you guys can see, we had this volatility here. What happened after that? We start to break these highs, we start to break these highs, we start to break these lows. We start to break the highs, we start to break the lows. We start to break the highs, we start to break the lows. We break the highs, we break the lows. We break the lows, we break the highs. What is happening? Price is being corrective. Okay, so after you see this bit of volatility, this indicates to you that price action is going to be corrective. Okay, so also when you see big wick at the end, and let's say, for example, you want to trade this is some kind of descending price action, price broke above, may change of character, make break of structure, you have some bullish order flow. Even though it's a sideways trend, let's say that you wanted to trade here, you wanted to take your trades after the based on this demand zone. When you see this big wick and volatile retest, this is your indication that this is not high probability to trade. Okay, so this is going to be your confluence tomorrow when you're looking at order blocks. So let's say, for example, you have this ascending price action. It indicates weakness to the upside, reversal trade, boom, you have change of character here. You want to trade based on this zone here. You have corrective pullback, price comes back here. You're going to trade his. Why? Because this is high probability. Price is building liquidity on the way up, breaking these highs with no momentum, indicating to you that there is weakness in the market to the upside and price is going to continue to downside. So this is your confirmation that price is high probability. It's high probability to take your trades here. But what happens if you have volatility? Markets are going to be corrective and usually they're going to get stopped out. Why? Because momentum is stronger. Momentum is coming back. There's no indication of a weakness. Market is coming back strong and your stop loss is tight and you're going to just get stopped out of the trade. So this is why volatility is really important in price action. So basically, guys, this bit of price action is corrective. And when you look at this bigger picture, what you can see is that price action is pushing an uptrend. But is this a clear uptrend? Okay, as you guys can see, how we're breaking these highs, how we're breaking the highs, how we're breaking these major highs. What is price action doing after we're breaking the highs? It's immediately retracing. So you can see that this is bigger ascending price action. Yes, price is making new higher highs in the market and pushing higher, but also price action is not showing us momentum, crazy momentum to the upside. It's slowing down. After every high, major high is broken, we start to retrace and we start to slow down with momentum to the upside. So there is not, impulse, correction, and the impulsive break of structure, and then correction and impulsive break of structure. We do not see that. We see ascending price action breaking above, retracing, breaking, retracing, breaking, retracing. Okay, so this is EURUSD. So USD pair characteristics of USD is, we're gonna talk again, guys, more about pair characteristics. No worries, I'm gonna explain every pair and every pair characteristic that every pair has that we trade, etc. But I just want to mention that EURUSD is a different pair, a little bit different pair, and usually when you see a standing price action, this is indication of weakness and the price action is going to reverse. But on USD is not, that's not a fact. USD is most likely from this ascending going to continue to the upside. And when you want to trade your based on these demands, your trades are going to be high probability. And for example, this is EURUSD, and this type of entry is going to be high probability. But if you take the same example and you trade it, let's say for example AU, this is not going to be high probability. Okay, because again, guys, pairs are not the same. This is why it's important to learn price action. Also, another thing about EURUSD is that when you see this longer ascending price action and the smaller ascending price action, so something like this, ascending longer and ascending smaller, price action is most likely going to continue to downside. Okay, so it can happen as well on EURUSD. This is pair characteristics of EURUSD. Okay, so this is why with all those confluences and this bit of most recent price action being corrective, the right answer here, if you want to trade it, is do not trade, wait for confirmations. Okay, if price action continues and breaks this high impulsivity, this is going to indicate to us that we have pair characteristics on our side and we have this ascending longer uptrend on our side, and our trades are going to be more high probability. Okay, if you want to trade it, we're going to have higher success rate of trading. Also, if price action continues to downside, this is going to indicate our second pair characteristics, and we already know that our trades are again going to be more high probability if we see something like this. Okay, guys, so let's break down some as well some price action. As you guys can see, let me do this. So something like here, something like this. So when you look at the most recent price action, as you guys can see, we have momentum here that broken. Okay, we have a retracing impulse, as you guys can see. Then price action starts to pull back again, starts to pull back to the upside. We have then impulse to downside. To trades, a lot of you guys maybe come from some smart money concepts, etc. You would be looking at this zone, but looking at this zone is really not high probability, not good. A lot of people would look at this and they would see maybe this was a flip, and then boom to the upside. Then you guys want to trade this as failed supply and new demand created, and then you get taken out here. I mean, look at this, price action is indicating weakness, starting to pull back. And what happens after we see a massive impulse to the upside and we see a pullback? We see massive impulse and massive pullback. What can we expect with this move? Price to break the structure and continue to the upside. This is our indication The price action is, as I explained, impulse to the upside, correction, impulse to the upside. And what happened here? We didn't broke this high. We didn't even broken it. And then boom, impulsive retest, aggressive retest coming back on this area here. So this is why, you know, learning price action is really, really, really important, guys. Also, this is what I'm talking about when you see a standing price action like this. So you have momentum here, there's a big momentum here, and then we start to have a little bit of weakness. You know, price breaking these lows, retracing, breaking these lows, retracing. There's no momentum in the market. How do we break the lows? Not that impulsively, okay? Not that impulsively. And what happens after? Big momentum to the downside. This is, again, characteristics of your USD. So you're gonna see price action pushing lower, you know, showing us weakness to the downside, breaking these lows not that impulsively, and then boom, just going to the downside. This is, again, your USD, and this is why it's important to know the characteristics. So again, guys, there is difference between, you know, this bit of momentum and, you know, this corrective price action. You know, again, we are breaking the major highs here, you know, here impulsively, but what happens after we break it? We left a big wick. This is weakness. And then how do we break this? After we break it, again, wick, and again, pullback, retrace. And again, how do we break it? We break it, wick, and pull back. So there's a lot of different scenarios, different price action, different, you know, things that you guys can learn and that you are going to learn, but we're not going to speak everything about it in the video. This is just the general, you know, video about price action, and I'm talking about price action in general. And then later on in the videos, we're gonna go and specific details about certain things. So yeah, that's pretty much it for this one, guys. I hope you enjoyed it, hope you learned something new. If you did, yeah, I wanted to say click the like button, but I think this course is not gonna be on YouTube anymore, so it's gonna be on our website. So yeah, nevertheless, that's it for this video, guys. If you have any questions, just DM me directly in Discord, and yeah, I'm gonna be more than happy to explain and help you out. So yeah, that's it for this video, guys. I hope that you enjoyed it, and yeah, see you in the next one.